Hello, this is Steve Sanangelo from the SRS Rock Report with a new important YouTube video called The Coming Exploding Silver Price Will Behave Like Palladium on Steroids. Now, that may sound like hype, but if you look at the charts that I'm going to explain in this video, you're going to see that silver is now starting to behave like palladium in some different ways, but also in the same way. And I will show you why palladium is the price has exploded over just about 5 times in the last several years, and why that's the case, and why I see silver beginning to look or behave like palladium. So now, one of the reasons we have to see the difference, I hear a lot of people on the internet, on my website, and on Twitter. I spend a lot of time on Twitter at the SRS Rock Report Twitter feed, that why isn't platinum doing as well as palladium, like gold? Well, if we look at this, this is the global platinum versus palladium's annual and total net investment. And it says it all right here. There's so much more investment in platinum because there's more supply of platinum than there is for palladium. And so it's being absorbed by investors. So we could see that platinum, and I just want to let you know that platinum is going to be either in a white or gray color, palladium's purple, and silver is blue. So we could see from 2015 to 2020, there's been a net investment demand for platinum. But look at palladium. It's been disinvestment. It's not that investors are just selling it. It's actually they're selling it for higher prices so it could be used in industry. So I'll explain this chart again in a minute. And here we could see, if we look at the average annual prices, and I'm going to explain in more detail this chart later on in the video, but what we could see is now the silver price is on the right side, and we have the platinum palladium prices on the left side. So we could see that even though silver did spike up, it's starting to come back and it's actually outperforming platinum. But here we could see how much palladium has moved up. It was trading a little bit more than $500 in 2016. Now it's over 2,500. And these are the average annual prices. Those are the prices I go by. I don't go by price spikes. You have to look at the average prices of these metals yearly. So it makes a lot of sense. Now, before I get into the silver acting like palladium on steroids, it took about 2 days to put together this public video. So I just wanted to provide some information that we provide to the subscribers, the silver and gold subscribers at the SRS Rock Report, because I believe some of the detailed information is very important because it connects a lot of the dots that I see missing from the mainstream media, even in the precious metals industry. Not many people are covering it. So the coming crisis, how this factor will wreck the U.S. economy. Very important information about energy and GDP and what's happening. And that's for silver members at the SRS Rock Report. And this is also very important. The missing link, the collapse of the Roman Empire by peak silver production. And while the silver production peaked, which also coincided with the peak of the Roman Empire, what's very interesting is that it took a massive amount of wood to produce metals, especially silver, gold, copper, and lead. And from my analysis, and if you become a member and watch this video, just in 50 years, the Roman Empire cut down almost 4,000 square miles of wood just to produce silver. And I've seen the estimates for all metals. It's between 16 and 32,000 square miles of wood to produce these metals. And then they've got to do other things. They got to cook and heat their homes and use it for building materials. So it's important to understand what's happening with energy because it's the same situation we're dealing with now. Okay, let's get into the reason why palladium is surging almost 5 times in the last several years. And it has to do with these, basically with industrial demand. So this is total global platinum consumption by various sectors. And this is for 2020. This data is in 1,000 ounces. So we could see the AutoCatalyst, which is a main source, a main consumption for platinum, It's about 2.2 million ounces. Jewelry was 1.5, 1.6 million ounces. And then other industrial for platinum was 2.2 million. And then here, 901, about 901,000 ounces was for investment. So we could see the AutoCatalyst, which is for diesel. We must understand platinum is used mainly for diesel catalytic converters. About 32% of its consumption in 2020 was AutoCatalyst, 23% for jewelry, 32% for other industrial, and 13% for investment. Now let's look at palladium. What a difference. It's just about almost all AutoCatalyst. And I'm going to show you why. So almost 8.5 million ounces was used last year for palladium AutoCatalyst, and it's mostly gasoline engine AutoCatalyst. Only 93,000 ounces was for jewelry, 1.5 million ounces was for other industrial, and this here was that net disinvestment of 185,000 ounces. So we could see that AutoCatalyst was 86% of the total usage consumption in 2020 and 15% for industrial. Now that's over 100%, but we had 2% net disinvestment. So we could see basically that the AutoCatalyst was the overriding factor driving the palladium market. So if we compare platinum and palladium, the AutoCatalyst and total industrial demand. So we have two different things, right? We've got the AutoCatalyst sector, and then we have the industrial, but we can put them both together because basically they're both industrial. So last year, platinum had 2.2 million ounces of AutoCatalyst. Palladium had 8.5. So total platinum industrial demand, including the AutoCatalyst, was 64% at 4.4 million ounces. Look at total palladium industrial demand, 99%, almost 10 million ounces, with most of it for the AutoCatalyst. So this is the big difference because of and I'm going to show you in this next chart, the reason why we're seeing such an increase in the palladium market is due to the increase in auto sales, especially gasoline engine auto sales. This is a chart showing global car sales from 2005 to 2020. And China and India have the largest percentage growth since 2005. China is in the light green here. India is in the yellow. And so in 2005, China had 5 million car sales. By 2019, right here, they had 25 million. India went from 1 million in 2005 to 4 million. So now some of the other countries, or let's say the European Union, I think actually had a net less. Japan actually had less. I think the rest of the world in purple had a little bit more. And even the United States, even though it declined by 2009, it's even less in 2019. Now it's interesting. In 2020, we had the big drop in automobile sales manufacturing due to the pandemic shutdowns. But we could see even before that hit 2019, they were falling. So something had changed already. Something had changed already in 2019 before the pandemic hit. And I'm going to talk about that for the gold and silver members in upcoming articles and posts. But if we look at this chart by JATO, this is global and China car sales by type of fuel. Now, this is as of the first half of 2019. Full year 2019 is very similar. The ICE engines, which are the internal combustion engines, mostly gasoline and some diesel, but mostly gasoline. Now, the EVs were 9%, and they've been increasing, but that also includes hybrids, not just total 100% electric vehicles. That includes other kind of hybrids. But again, 91% of the auto sales are gasoline and diesel. But if we look at China, and now China is the largest increase. It went from 5 to 25 million. That means they're producing 20 million cars now in 2019, And the dark red is gasoline. We could see right here at the bottom, diesel is the light red, and they were doing some diesel, but look how they've cut their diesel down. The gasoline has increased. It has been dropping, but it's still about 92%. And we can see the EVs, the electric vehicles. And again, this is not just 100% electric. This is also the hybrids. But still, the reason why palladium, the price and demand has gone up so much is because China and India and even other European cars, they stopped producing diesel with the problem with Volkswagen. They've moved to gasoline. So there's been a huge increase in global gasoline engine car sales. And we could see it right here that it's most of it is what China is producing are gasoline engines. So if we look at this chart showing global platinum and palladium movement of stocks, now this is just the net movement of stocks according to the Johnson Matthey February 2021 PGM report. So we have what we see here, platinum for each year, they had some deficits in stock movements, and then they had some surpluses. But look at palladium. It's been always deficits. And we had some big deficits in 2019 and 20. So we look at the net deficits or net movement of stocks over this 6-year period. It was 836,000 ounces for platinum and 2.9 million ounces for palladium. And that's the difference, because that's the reason why you're seeing so much of this net disinvestment. Investors are selling palladium for a much higher price, and they're putting it into the market to feed the insatiable demand by the global auto industry, especially the gasoline catalytic converter industry. So even though if we go back here, we could see that the platinum was the net movement of stocks was a minus 836,000. This was the total investment was 3.5 million ounces. So that 836,000 ounces didn't really impact the platinum market, but it considerably impacted the palladium market. And we could see that in this chart. This is transparent platinum holdings, and it comes from Gold Charts or Us, run by Nick Laird, does an excellent job. We can see all the ETFs, and even the COMEX here has got some platinum holdings. So since 2007, even though it's fluctuating, it's been going up. So that's the reason why platinum has been underperforming palladium. The stocks, the transparent global stocks of platinum are continuing to go up. And so if we look at the transparent platinum holdings versus the price, this is what we see. Early on, back in 2001, we see the platinum price surged along with the oil price, and then it collapsed, moved back up. And in about 2011, it was about $1,700 an ounce, and it continued to decline. Why? Look at what happened with the platinum stocks. They continue to increase. So the platinum price declines about 30% as global holdings increase. Now look at palladium. We see the exact opposite. Since palladium holdings, global palladium holdings, which were only 3.2 million ounces, look how they've collapsed. Now they're below 800,000 ounces. It's actually 758,000 ounces. So what's happening is the reason why palladium is going up is the world is actually running out of palladium. And there may be some stocks that are not held in ETFs, but this is where a lot of it is being held. So what we've seen, if we look at the next chart, which shows transparent palladium holdings versus the price is in blue right here. Palladium price surges 5 times as global holdings collapse by 78%. Here we can see the collapse of the palladium holdings, which we could see right here. Same thing. They've collapsed, and the price, we could see the price shot up. And now it's at over $2,500 an ounce. Now, what's interesting, the reason why silver is not quite behaving like palladium is more, it seems to be behaving more like platinum, it's due to the look at the transparent silver holdings. They're doing kind of the same thing that platinum is. We could see how much they've increased over the past several years. And now they're at about 1.6 billion ounces. So if we look at the silver price, and I go by the average, which is about 35, and now it's at about 25. The silver price has fallen 25% as global holdings increase by 100%. They doubled. They were about 800 million ounces. Now they're 1.6 billion. I'm going to talk more about these holdings and future articles and videos at the SRS Rock Report for the subscribers. And I'm going to tell you more information how this is going to change. I see it changing in the future. But again, the reason why palladium, we're seeing such a big increase in the price, it's all industrial demand. There's not a lot of investment demand. There was investment demand, but investors can't really invest in something when we're seeing a collapse in the available palladium investment holdings. It's likely industrial demand that is pushing the price up because they need the palladium. So we see platinum looks very similar to silver. And that's the reason why that the silver price has underperformed palladium, but that's starting to change. And this is why I believe it's starting to change. Now, we had the big silver short squeeze that they tried taking place at the end of January and beginning of February, and that caused a lot of volatility in the ETF inventories, which is the iShares and other inventories. But what's interesting, even though the silver price is fluctuating, but it's still trending higher, look what's happened to the COMEX silver inventories, the total COMEX silver inventories. They're declining. And I believe what's happening behind the scenes, more and more investors are taking delivery of the metal, and they're taking it out of the COMEX, and they're taking it out of some out of the ETFs, and it's going into a different storage. And this is a different factor than the industrial demand by palladium. So if we look at this next chart, I'm going to show you there is a war going on. I call it the war of the SLV or the ETFs, the silver ETFs. This is the iShares SLV ETF. And we could see when we had the silver short squeeze, it shot up 110 million ounces in just 2 days or 3 days. And then we could see it's been liquidating it. And this is really the only one doing that. And to me, I've said in my past videos for subscribers that I believe that it was done to cap the price of the iShares because there was so much demand coming into it. So the net result for 2021, we did have the big increase in 2020, but for 2021, the net increase for the iShares silver inventories is about 11 million ounces. Now, the next largest one is the ETF or FEG ETF, which has increased 12 million ounces since 2021. So even though we had the decline, a peak and decline with the iShares, the ETF securities, it's gone up and it stayed up. It's now at 155 million ounces. So it's increased actually more than the iShares. And the iShares is nearly 4 times larger. So we could see that the ETF securities has held on to its silver. And of course, everybody knows that Sprott is doing it on steroids. Since the beginning of 2021, look at this. The Sprott PSLV ETF is up 38 million ounces. That's more than the iShares and the ETF securities combined. And so I think what's happening, I think the JP Morgan iShares is liquidating its silver and it's being used into the system. It's being absorbed into the system. Sprott is adding it because it's based on true investment demand. Now, why I believe this short squeeze and why I believe silver is going to behave like palladium on steroids, it's kind of what happened with silver when it lost its role as a monetary metal, when it used to be in coins. And then when the US government stopped using silver in its coinage, then the next decade we see the silver price take off. I mean, it goes from less than $1 up to $50. And so it's not going to take that same amount of time, but I wanted to show you the dynamics playing out here. The reason why the US government removed silver from coinage was because industrial demand became too strong. We could see back in 1950, industrial demand was 157 million ounces. It had more than doubled by 1965. It was at 355 million ounces. And coinage, we could see coinage was 44 million ounces. But look what happened. Towards the end here in the 60s, the US government started basically removing silver from the treasury. And what they did is they put it in coinage. And they minted a lot of coins. And the record was in 1965, 385 million ounces of silver coins were made. That is the dimes, that's the quarters, the half dollars, and the dollars. 385 million ounces. And so when you look at the mine supply and then secondary scrap and other, now this other is other official coins that were melted. So we could see that the total supply for 1965 was 747 million ounces, but look what the industrial and coin was almost the same. It was 741. So that was the problem. The US government removed silver from coinage because industrial demand was consuming much of it. And what happened over the years? The price of silver rose because of supply and demand. Now here we can see 1961 and 1965, the transition away from the government controlled price. This comes from the 1950, 1999 World Silver Survey. It said during this transition period, the US Treasury still had to keep the silver market well supplied. We have to remember US Treasury in the late 50s, early 60s had over 2 billion ounces of silver. In order to keep the silver market relatively calm until it had completed the withdrawal of silver from currency, in late 1963, the Treasury resumed its silver bullion sales as part of the effort. And part of this other is the silver bullion sold into the market. Over the 6 years between 1960 and 1965, the Treasury sold a total of 342 million ounces of silver bullion. It used another 814 million ounces of silver in coinage. So right here is when it was using a lot of that for coinage. And right here, this other, they were selling it into the market. In total, the Treasury used 1.1 billion ounces of silver from its reserves. Much of the silver, especially the bulk of it, was used in coins, found its way quickly in hands of investors. What happened? It's the old adage, good money takes out bad money. And so what did we see happen? If you go if you go in back in that time, a lot of stores, people were just taking silver out of circulation. And this took place for many years, but by the early 70s, most of the silver that was in coins, it was taken out. And so the government steps to remove silver from the currency led investors to conclude that the price of silver would rise sharply once the Treasury no longer was supplying the market with such large volumes of metal. So now we head into the beginnings of the silver free market from 66 to 70. Now, if you listen to this, you'll understand why I believe silver is going to behave like palladium on steroids. Investors remain keenly interested in silver, absorbing 620 million ounces of silver from 1964 to 1970. Interestingly, the price of silver rose from $1.29 to $2.57 in 1968 before falling back. The rise and fall in silver prices was coincidental with the volume of these investor purchases. As investors increased their demand for silver from 1964 through 1968, prices rose. As investment demand decreased over the next 3 years, prices softened. So, lastly, the weighted average price paid in these investor acquisitions using annual average prices was $1.88 per ounce. This figure will be important in understanding the next phase of the silver market from 1971 into 1979, when the new supply of silver fell short of industrial requirements and the resulting deficit was accommodated by investor selling. So the change this time around won't be an increase of industrial demand. There will be some, but it's going to be the increase of new investors, because the situation in the market with the Federal Reserve, the US Treasury, the other central banks in the EU printing money, propping up the markets, buying treasuries, more and more people are waking up. More and more people are waking up. And what they're doing is they're doing the same thing. They're taking silver out of the market and they're putting it in their safes in their homes. And this is just going to get stronger and stronger as time goes by. And many of you are very familiar with this chart because I believe it's a new sea change in the silver market. This is global silver industrial demand versus net and ETF investment 2011 to 2020 forecasted. And as we can see, if we put silver physical and ETF demand together, it never is above 300 million ounces. It tapers off in 17 and 18. But look what happened in 2020. If we add physical and ETF investment, it surpasses industrial demand for the first time. Again, this is similar to what was happening back in the 60s. And so now, what happens if we get another year like we had last year? And we're seeing it. If you look on, I've been watching on Twitter, I think the Royal Mint is they had to refuse, cancel orders in Scotland and in the UK for silver. Hey, the Perth Mint is out of certain precious metal products. Even the US Mint, they're out of certain products too. And so I think this is just the beginning, because again, all the problems with the financial system are just going to get worse. And I believe that's tied to the energy. So when we start to see more years like this, there's going to be a shortage or availability of silver, only at much higher prices. And then again, this was a banner year, because if we look at the annual world silver mine supply versus global net silver physical and ETF investment, it was 75% of global mine supply. It has never been that high. At the highest in 2008, it was 42%. It's now 75%. You can't have too many more years like this, or you're going to start seeing that silver price move. And then many of you have seen this chart too. This is the other dynamic taking place. The top primary silver miners, companies and mines average yield from 2005 to 2020. Back in 2005, the average yield was 13 ounces a ton, and now it's fallen to 5.8. This was not due to the pandemic, even though we saw a reduction in the silver production from the primary miners. Some of the miners had higher ore grades, higher yields. Some had lower, but the overall change was a lower to 5.8%. So we see that the average yield has fallen by more than half, which means the mining industry has to move twice as much ore, 9.4 million tons 2005, 2020, it was 20 million tons, to produce less silver. So this is just another dynamic in the silver market that will make the silver price even stronger. So if we look at this chart, go back to 2007, even though silver had the big price spike, it's come down. In 2007, it was about $13. It's now double. It's at 26. Look at platinum. Platinum was about $13.50. Even though it's gone up, the average price right now is about, I think it's $1,186. It's less than what it was in 2007. And again, that's due to that, what I showed you, because most of platinum is industrial demand, but we see the stocks are continued to increase. And again, if we look at palladium, that's the real winner, especially since 2016. Why? Because its global transparent holdings have collapsed 78%. So if we understand that silver, what's happening in the silver market, the short squeeze is still taking place. Now, if we have a big sell-off in the markets, the paper price of silver can go down temporarily. But what is that going to do? That's going to get more people to buy silver. And it's so different than the stock market, because when the stock market goes down, when stocks go down, people continue to sell. Smart money buys, but most people sell. But when silver falls, most people are buying physical silver. And so I think this is setting up for the perfect storm, because silver is now setting up as more and more investors are getting in. And we have to remember, when you have a price of $26 an ounce compared to almost 2,600 for palladium, you can buy 100 times. Is it 100? Yes, it's 100 times more silver for the same price as palladium. So I think we're setting up for a very interesting change in the silver market. Seeing the COMEX silver inventories to liquidate. I believe we're seeing silver being taken out of these exchanges now. Very savvy investors are understanding that the dynamics taking place. They're removing silver from the market, just like palladium. So if we put all these dynamics together, and I'm going to explain more about this for the silver and gold members at the SRS Rock Report, but I do believe silver is setting up in the background, behind the scenes. We're starting to get a lot more investment demand. And I don't mind seeing people getting into the ETFs, because that is going to help blow up the price too. As more people get into ETFs, more people buy physical silver. At some point in time, the rubber is going to meet the road, and we're going to see the silver price explode, because there's not going to be the available supply. There's going to be such a tightness. We're going to start seeing not only the retail price, but the wholesale price move higher. Well, thank you very much. And please consider subscribing to the SRS Rock Report YouTube channel and checking out our website at the srsrockreport.com. Thank you.